Cool. So again, let's pick something random to trade. Now the chart on the average. Yeah, no, this chart is not the one. Look at this weeks. So something like this in the live market, I think it was Elliott Electronics or Adcock Ingram. So if I see big wigs like this, it means the stock, to me, it looks like the stock is liquid, so and way too volatile. So it's going to be very hard for me to hide my stops. I don't do something like this. Let's see how it looks on sake. Still, wouldn't trade like something like this. So let's try for something else. Hopefully this would work. This looks much better. They have changed. So I changed computers, so.
Oh, okay.
Yeah, the Mac was starting to give me problems. It's a bit old.
But so you went back to Windows.
Yeah, it's 2015 version. So it was starting to, especially when I'm doing the live webinars.
Yeah.
Yeah, it was starting to be trouble. So I'm going to add an HR for you as well. If you need it for reference, let's change that to 15. Let's change that to 50. And let's change that to 200. Cool. So here's your HR here. I removed the borders because I like set up nice and clean. And if I found where you can remove the grid. So you click here on these settings here, and then you go to the grid, and then you can, So this is what I removed the borders because I prefer it like that. So anyway, did you manage to get your stuff sorted there? With
Yeah. Actually opened another one on Xness.
Oh, you're on Xness now?
Yeah.
Okay. Should have given you my code.
I think traders say they still sorting out some stuff.
I should have given you my Xness.
Oh yeah, Xness code.
Yeah, my Xness affiliates code. But it's all good. Oh, kind of we're both going long and short, ne?
Yeah.
So this right here would be my entry, right? So for now, let's do this. For now, I'll pick my own stops so that you can see how I'll trade both long and short, just like we tried to do yesterday. Nah? Okay, so and I'm not going to focus on position sizing that much. 296.80. To 296.80, and so 10. No, man, not 29680. 29680. It's just V. Cool. So if it breaks this 264 level, I want to lower my stop to just above that high.
Cool, cool, cool.
Okay, let me pause. Looks like we have ourselves a reversal pattern here. Stock is starting to make higher. Yes, look like it's starting to make higher highs. I mean, higher lows and higher highs. Okay, let me pause. But if it breaks below there, I want my stop to be there and I want to go short. Let's see how that holds up. See, I was right about that turn there. So cool. Now that we're in, the tide is seemingly starting to turn. Golden cross. First rally, as I said, man, the first rally after a golden cross barely ever holds.
Okay.
Okay. So we have what we call an ascending triangle pattern. Are you familiar with an ascending triangle pattern? Just hang on a moment. Yeah, sorry about that, man. My young champ came to greet. Anyways, so an ascending triangle pattern is a triangle. So it has rising bottoms but a flat top, right? So as you can see, it's ascending, but it's flat at the top. So we have three types of triangle patterns. We have ascending, descending, and we have an ascending triangle, we have a descending triangle, and we have a symmetrical triangle. So an ascending triangle pattern can be played both ways as a continuation pattern and a reversal pattern, but it's often played as it often manifests itself as a continuation pattern, right?
Okay.
So how you trade that is, so this is where the triangle starts, right? So you take the width of, you take the width, right, of the triangle from its broadest point, which is the side, and then you extend that upward, extend that to the upside. So now your target is, well, let's just, so now your target would be 345, right? And then your stop loss is the last low before the breakout. Just below the last low before the breakout. So in this case, will be just below these lows. So to give it a bit extra room, put it just be just around the 50-day exponential moving average. Let's see how that plays out. So the chart pattern fails, right? Or you could say, no, it hasn't failed, it has morphed, because chart patterns morph all the time. And that's another important thing to always keep in mind, that chart patterns morph, right?
Yeah.
They are not immutable. They morph all the time. So you need to adjust with the market as the patterns fail and you know, now it has changed into a cup and handle pattern. Now we're no longer looking at this ascending triangle pattern. We're looking at something else. Now this is a cup and a handle, right? So this chart pattern, William O'Neill wrote about it a while ago on his book, How to Make Money in Stocks. It's also continuation and a reversal pattern. And if you jump back into a 4-hour chart or maybe even a daily chart, okay, it's more visible in the 4-hour chart, right? You can see at the broader scale, we have this cup, and the handle is actually an ascending triangle pattern, right? And then when we zoom, that's just wind at the back. It's wind at the back. And we zoom, we have so this handle is manifesting itself as an ascending triangle pattern / cup and handle, right? So we have wind at our back. So now we're waiting for the 314 to break.
Okay.
There you go, right? On that breakout there. Yeah, on that breakout there. So since I'm gonna remove this for now, let's go long, and with the stop at 303. 55. See how that goes. There you go. Now that that's broken out, I want to see what happens when it gets to, because remember, markets are memory. So I want to remember, so that the market prior to this, we don't know where it was coming from before it hit this. It hit here and then fell in the heap. And the next time it came here, it hit and then continued to, and again fell in the heap. So when it's coming back to 323, it won't be the first time in, let's get big range. It would be the first time in, let's wager around, or rather, let us say it's the first, it hasn't, the correct way to say it, it hasn't gone to this level in 254 bars. So if this were a daily chart, this would be 3 years. You see?
Okay.
So it's going to be important to us what happens when it gets to that level again. My assumption it's that it will turn in reverse, or at least find some selling when it gets there.
Okay,
Also,
cool.
what happens to this high here.
Right, okay.
So this becomes the significant level because it's more recent, and the market hasn't gone to that level in a while. And when it does, it shows some respect, right? So as it breaks there, I want to raise my stop slightly because that was an important level, maybe to below that low there. And now I'm targeting my break-even point when that level that we were actually waiting for breaks.
All right.
So now it's consolidating in a flat line. So okay, that failed. Okay, that stopped, which is fine. See that level, the importance of that level. Can you see the importance of that level? Can you see the importance of that level?
Mm-hmm.
And look what we have now. Now we have what we call a head and shoulders pattern, right? So you have the left shoulder,
Mm-hmm.
the head, and the right shoulder, right? Which is this is an inverse head and shoulders pattern. It usually calls the top open the trade as a continuation pattern in the direction of the trend, like in this instance. So you place your stop loss just below the right shoulder. If the market takes the right shoulder out, you want to be out in that trade. And if you want to target, you can extend you can extend the height of the head from the breakout point, which roughly speaking is the same as the one we had before, right?
Cool.
Yeah, you know me, I don't place targets because who the hell knows, man? This thing can go extremely high. 30. Right?
Mm-hmm.
So it's continuing to run. It's typical for head and shoulders pattern to retest the neckline when after breaking. Right? So what other people tend to do is wait for that retest. Instead of entering on the breakout, they wait for the retest and enter on the retest. So they place like a buy limit order around the neckline. I don't prefer that method because when I was trying the putting buy stop orders at retests, I emotionally felt a bit of anxiety and worry that I'll miss the trade. So to account for that emotionality, I just went with, man, just take the trade. Breaks out, just take the trade. And because of the style that you're trading, because I don't have targets, I never really have a predetermined risk to reward ratio, as with someone who plays targets on positions. So like what would be a couple of rands if I get a trend that's going to give me, or what's a couple of pips if you're going to get a trend that's going to give you 1,000, right? So just jumping in gave me that ease, knowing that this could be a 1,000 pip trade and I could profit from it because of my style. And what's a couple of points? You know what I mean?
Cool.
So yeah, which is why I don't normally wait for retests. But they can help skew your what's this, risk to reward. At that time that didn't work out. So we'll move on to the next trade. So we're going to wait for the 330 to break. Hey, come back. Okay, so what I'm seeing now is that tight stops are not working here. They at least seem not to be working. So I'm going to widen it a little bit, just a tiny bit. And I'm going to be more cautious when raising my stops because I'm picking that up. You must also having a relationship is a bad word. Uh, uh, um, but in some sense, act as if you're in a relationship with a stock. You're trying to learn its behaviors in the market. You're trying to learn how its price action manifests itself in the market. And we're also trying to learn how the stock reacts to different market environments, how the stock reacts to news, how the generally speaking, how the instrument that's trading responds.
Oh, cool.
And then so that you can adapt to it. Okay. So when it breaks the 343 level, I'm going to, okay. Now if it just breaks that, I'm going to raise my stop and, okay. So I've broken that level, I'm tightening my stop. Okay, now let's just get rid of all these things, right? So now, because for all intents and purposes, we're trading at new highs, and I don't have old resistance to refer from, I go to the tried and tested, the box system.
Okay.
Right? See how that behaves. There's our breakout there. There's our breakout there. But instead of just putting my stop just below these lows, what I've learned about this stock is that, man, it can pull back, right? So I want to raise it to still have my 50 days protecting me. So before I jump, I rush into raising my stop into this higher box, I want to first be cautious, right? And then now I want to add to my position 325, 26. What did I do? Oh, I was looking at the enterprise 339.39.
Okay, okay.
All right. Boxes are valuable, especially when the stock runs like this without taking a breather. And then boxes become quite valuable, especially if you want to add to the position. Okay, so now I'm going to wait for the 50 to catch up to 342 because that's where I want to place my stop loss. Okay. There you go. There's a breakout there. Right? So instead of raising it to just below that bullish engulfing, which is actually what I really want to do, but I'm still studying the stock, so I'm not going to be in a hurry to raise my stop loss to just below these lows, right? Still want to have 50-day as a buffer to almost like protect me. So the new stop is 345. 97. All right. So now if it breaks to this higher box, let me pause right here. This is the psychology behind when a stock breaks a new high, right? When a stock makes a new high, what tends to happen, so the reason why a stock would react to an old resistance is because there are old buyers who are caught in that trade for a significant amount of time who are just happy to break even, right? But when a stock goes into new highs territory, no one has bought the stock before at that price. So everyone who holding the stock is winning, has the money, which reduces the propensity for the stock to react, because fewer and fewer people are selling once the stock goes to new high, because no one is feeling any pain. Remember what drives markets? Fear and greed, right? So at new highs, everyone is feeling a sense of greed, and no one is feeling a sense of fear, which is why things start to run at new highs, right? So it's important for you to understand the psychology behind these markets, and of course, once if it's ran hard enough, there will be some reaction. Looks like it's holding the base of the box very well. Very well. Okay, that's my next stop. It's holding this base very well. See what happens. Okay. So now I no longer need the box system, because there will be people that bought at these levels that want to get out even. So I'm expecting when it gets there to react. And if it doesn't, it means the buying is a heck of a lot stronger. So I want to raise my stop loss to below the low of that move, right? So let's see how that plays out. And the same thing happens on the downside as well. There's going to be people who miss the bus, right? And then when it starts to consolidate, they see a buying opportunity. And every time the market comes back to that level, all they see is a buying opportunity. They jump back in. But if the market breaks that level, that means no one is buying in anymore. So the best thing to do is step outside, right? And then the short starts to kick in. Markets, generally speaking, markets are just driven by psychology, right? Because everything we say about stocks or everything we say about markets, it's just for the most part just our opinion. What matters is what we actually do, right?
Okay.
Because take MultiChoice, for example, everybody hates DSTV because of their prices, but everybody pays for it, right? So it doesn't matter what people say about MultiChoice on Twitter. What matters is what they actually do, right? I mean, you and the business. It doesn't matter what people, generally speaking, what people say about your product line or your service. What matters is whether or not your client are purchasing the product or service. Because if they continue to see value, right? Same thing applies here. this was just nothing but mass psychology. You see, so now the market, when it came back to this level, no one was selling. It made a new high, right? So I raised my stop loss. I have my 50-day protecting me. Damn it, that's an error. And I don't like doing those type of errors, but that's fine. So I closed that position accidentally. Again, now that we at new highs, time to bring Davos back in. It's time to bring Davos back in, right? With targeted stop at, let's say somewhere at the base of that box. So I'm going to raise my stop to there. If we start moving into that there. That box continues to hold. Continues to hold. Okay, let me pause, delete everything. You see, I'm not just fixated in one pattern once I've discovered it. I move as the market moves. I move with it. I flow with the tide of the market. I try to flow as best I can with the tide of the market. Looks like we're getting stopped out of this position. 200-day looks like it's defending us for now. Nice strong defense from the 200-day. Again, psychology. So 200-day, the 200-day exponential moving average is regarded, generally speaking, as a significant fair value, measure of fair value, right? So you'd note more often than not, when the price gets to the 200-period exponential moving average, 200-period moving average, it reacts, it reverses. It doesn't happen all the time, but it happens often enough. So markets over years and years and years, just like our belief in God, have a belief in the 200-day exponential moving average and the 50-day exponential moving average. Because as you can see, they tend to be respected a lot, almost as support and resistance of their own. And now if you can look at this trend, it's averaged around the 200-day exponential moving average, the long-term trend, right? So what happens is when the market holds the 200-day exponential moving average at a trend line, the next time the market hits that same line, there are buyers who come in and say, who missed out on the prior rally, who want to now buy the dip, right? Because they have a belief on that support trend line. Again, belief on the support trend line. You see? So now that the market has come in and made a new high there. Yeah. So how I would respond to this is like, okay, I appreciate the market has made a new high. Okay, this is I thought, I appreciate the market has made a fairly new high, but what I want to do, I actually thought my line was somewhere here, which is why I took a pause for a moment, right? Is kind of wait for that breakout candle to be taken out. You know, especially if I'm planning to push my stop quite aggressively. For example, just in between that gap. So instead of just jumping in immediately, I would want to wait for that to get taken out. And then we have that and with a nice bullish engulfing candle. So now I'm happy to push my stop there, right? What is it? Then 8. There you go. I'm happy to push my stop there. Not adding at the moment. Why? My stop is still below. Right? Let's see some price action. Again, the long trend market psychology came in again. That long trend line support holds well. And you see when it got broken, when it retested, the market sold off again. Why? Because it broke down here, right? And then buyers were like 200-day exponential moving average. This shit is cheap. Pushing the price back up again. And then there are short sellers who regard this as a false rally and then hold that support from the other side, from the trend line from the other side. Eventually, those sellers lose, and then buyers take in the price. Or sometimes, you know, the sellers win, but in this case, sellers won.
Okay.
So another breakout there. Not going to be in a hurry to move my stoppers yet. Let's rewind. Actually, I will. I have my 50-day protecting me, so I'll give some room. I'm going to drop it. 11. There you go. Then I'm going to add to my position. Three, 7, 11. So when the market makes a new high close, so you got stopped. So we kind of just got our money back with a small interest. Because we go back with a fair bit of losses, and then we picked up. And had we not accidentally close, I think it was this position. We did not accidentally close this position. This profit slightly bigger, we would have made our money and then some, right? So, because who would have seen such a drop, right? So again, you wait for a new high. Oh, that doji is dangerous. This doji kangaroo tail is dangerous. It shows sellers are running out of steam. I mean, rather buyers are running out of steam. So it's a reversal pattern, especially if it's followed by a red candle. It's alarm bells goes off when something like that happens. Alarm bell starts to really go off. See. Looks like we're turning to the short side now. Let me pause. We have a death cross. Okay, then it close through. So I'm waiting for the 362 to break below. Well, looks like that's not happening. Looks like we find ourselves in a giant range. Okay, let's increase the speed. Okay, never mind. Okay. That right there, with death cross at the back of us, I want to initial my stop at 375, and I want to go short. 376, 70, and then I want to go short 10 shares. And then I have that as my next target. Okay. When that happens, I want to lower my stop to there, just above those highs there. See, now I'm gonna zoom back to see if there was any. So if we go back, this level 341 was a resistance level. So I want to see if it now holds its support. If it doesn't, I want to add to my shorts.
Cool.
That's if my stop is below the right place. So let's stop there. Okay. At that point there, I want to go short with my stop just above the dojo, 362. Short. Okay, looking nice and dandy. Remember that I think it was 341 level we're waiting for. Looks like the market respected it when it came to OTC.
Oh, okay.
Held its support strongly. Let's see if we put that there. Look at that. That's what we call an area of value. So now that we've broken on the upside, let's wait, because we haven't seen this price in a very long time. Let's see if it breaks through. So V, right? And it's too small of V. That one is too small a breakout, and I want to put my stop there at 365. 65, 70. Okay. So look at we found ourselves in a 20% drawdown, right? Think about how we would be simply by staying away from the short side. You see, because we called the top correctly and timely as well, right there. Right?
Yeah.
Except we tried to get smarter and short the market and we got killed for it. Now think of the capital reserve you have had you not gone short. And I'm not saying shorting these were a bad idea because they lost money. No, that's not what I'm saying. Even if they made money.
Yeah.
Right? Because markets are more volatile when they fall, it's harder to hide your stop loss, even when the trend is still continuing. It's not uncommon for a stock to make a higher high while continuing making lower lows.
Okay.
So now, looks like let me see, at all-time highs again. So what do we do at all-time highs? You know.
Boxes.
The boxes. So I can't draw a definite box, really, here. Or I could just use that as a baseline, because if I extend it to there, you see it'll hold the same support. So say if I put it like this, and then I duplicate it. Right? With that is a target for stop. When we break into a higher box. Into a higher box. Okay. We are no longer in need of the boxes because we have a level that we can look at. You see. Hello. Hey. So here, on the breakout here, nice gap and drive, but I wouldn't enter immediately here. Why? Because we have a reversal candle on the breakout, similarly to the one we had there, similarly to the one we actually called as a top there. Right?
Yeah. Okay.
So I want this doji to be invalidated first, which happens in the next candle. So I want to close a greener close, right? So I'm going to raise my stop to there at about roughly break even. And let's see what's going to happen if we add to this baby. So it's 381. Right? And at the same time, we can wrestle again with our boxes.
Okay.
What's my target next? That gap. So market gaps usually come back to close, right? But if it's going to take its sweet precious time, I want to exit the trade. If it closed about immediately, I'm happy with that. But if it's taking time and ending up breaking to the upside, it may never close the gap.
Cool. I mean, to have to actually,
Pardon? Come again?
Today actually have to leave. I think today I have to leave early actually.
Oh, okay. Plus we've had time. It's 6:30 already. So yeah, disadvantages of going both long and short. I think we've picked it up quite clearly. Did you have any lessons or questions that we can quickly clarify before we off?
No, it's all good. I think, the mix, mix of long and short, I mean.
Pardon?
I'm saying the mix of long and short might be trickier to get right.
Yeah. Shorting. The thing is, shorting is easy in hindsight looking at the chart. It looks very easy.
Mm-hmm.
But doing it in reality is a different story. All right, so you got to be careful, and you can't just flip rules and think they're going to work on the short side, because market don't move the same ways when they're going up as when they're going down. The speed is different. I mean, even when you're looking at reality, when you're climbing up the stairs is quite tough. When you're falling down or when you're going down, it's very, very easy, right? Mm-hmm. Especially when you're falling, because that stuff can happen very, very quickly. The forces or the powers of gravity also apply in the market, man. And the speed at which things fall can be quite painful.
Yeah.
Cool. We're gonna pop it here. Yeah, I'm gonna continue to trade the simulator a little bit until this trade is closed, and then I'll put the video up on YouTube.
Cool.
Cool, so man, you can exit. Otherwise, have a great day, man. We'll do this again tomorrow.
Cool. You mean Monday?
Yeah. Sorry, I forgot it's Friday.
Sure.
Cool, man. See you on Monday. Have a great weekend.
All right, cool. You too.
Cool. Thanks. Cheers, man. That is very interesting. Just as the shadi goes off, this happens. That's a massive gap. That is a giant gap. So it's even hard to zoom in. So I'm going to raise my stop to there. I'm going to be a bit cautious, trying to understand what the hell is happening. There, this is probably like corporate action or something. So just sending the picture that as soon as he got off, this thing started to rally. Okay, let's see how the market action was like. Now that becomes a significant level for me. In fact, Wait. The high of that move becomes that right there, becomes significant for me. So I'm going to raise my stop loss just enough to have the 50-day EMA protecting me. 448.36. Okay, let's show that. 8.36. Hit that. And then I want to add also on, okay, let's see how that action holds up. It's not, didn't take out that by any significant amount. 50 days catching up. This reminds me, so reminiscent of the distill trade. Then that happened. So yeah, interesting trade. I think it was just corporate action, potential buyouts, and perhaps that failed, or perhaps a buyout that had an unfavorable offer, or something of that sort. I don't know what the hell happened with the stocks, just a random thing that I picked up. Otherwise, that's it for the day. If you're new, please do subscribe to the channel, hit the bell notification button so that you don't miss out on new content coming out. And if you want to know more about the coaching session, if you want to join in, feel free to drop me an email at njabulo@trader.co.za. Otherwise, happy trading. Take good care of yourself, and see you next time. Cheers.